XAUUSD, popularly known as the gold spot. And on the gold spot, we have quite an interesting buy positions running right now, as we positioned ourselves exactly above the $2,025 level during our live session yesterday to capitalize on this bullish momentum. So our buy positions from yesterday still remains very active, with the gold prices staying within a narrow trading range over the last 24 hours before we finally saw the breakout of the $2,030 level. Now, this indicates a high level of uncertainty at some point around this area that gripped the market sentiments, as buyers opted to wait on the sidelines in anticipation of the US NFP report that is expected to come tomorrow. Now, the prevailing softer risk tone and expectations for a Fed rate cut in March 2024 continue to provide support for the safe haven assets such as the gold. Now, furthermore, the weaker JOLTS job opening data and a softer ADP report from the US yesterday indicated a slowdown in the US job market, and this has sparked concerns about a potential economic downturn in the US economy, further bolstering the appeal for safe haven assets such as gold. Now, given these factors, I want to maintain a bullish bias, and our trading decision for today should be guided by this current structure we've identified here in the last couple of days. Now, before we go into the details into what is really looking like at this particular point in time, let's run through what really happened at the beginning of the week and what led to the situation we had in this particular market. Now, remember, we've been on a very successful run on the XAUUSD since the beginning of the week. Remember that we had some sell positions on Monday, Tuesday, as we capitalized on that significant bearish momentum, giving us a minimum of 650 pips in profits on this asset alone, as we had multiple entries to maximize the bearish move. So at the beginning of the week, it was a volatile move as we saw price skyrocket into a record high at the 2,143 level on Monday's trading session. And this immediately after price tested that new high, we saw a quick rejection of that level, pushing price back to the downside, and ever since then price had continued to nosedive. Now, there are a lot of factors that is driving this volatile situation that happened at the beginning of the week. The most popular one is the psychological perspective, as we all know that whenever price action finds a new high, there is always this dominance of the emotions of fear coming into the market as a result of the fear that a price may crash from that point. So those who had bought the asset at a cheap price, as soon as price gets into a new high, they quickly close in some of their position to take off some profit from the market in the fear that price may likely crash from that area. And this usually results into the reflection of price action going through a retracement phase, consolidation phases, or even choppy situations in that particular market. And this was exactly the same thing that happened to the XAUUSD at the beginning of the week. Then another factor that could be considered as a result of this volatile movement was the news we got at the early hours of Monday as regards to the attack on the US vessels on the Red Sea. And in fact, immediately this happened, we saw a spike in price movement, as majority was wondering how the US was going to respond to that attack. And with time, we begin to see market digest the nature of the attack and how the US responded to it, result back into normalcy, bringing price back into where it started the week. So as a result of this volatile move, we had a range identified. In fact, it's a wide one, where price was confined within the 2,143 level and the 2,072 area. And one thing we noticed during our live session on Monday was the fact that price action was more of trading towards the support line of that range. And during our live session on Monday, we already saw a breakdown of the $2,072 area, and I did mention that if price comes back to retest the 2072 and the inabilities of buyers to break out of that structure will incite some selling opportunities. And remember, since then we have been selling this particular asset, and we also added more sell position at the breakdown of the 2050. We also added some more at the breakdown of the 2035 area, making us to capitalize on a minimum of 650 pips on those sell positions. Once again, congratulations to everyone who had capitalized on this opportunity. Now, during our live session yesterday, we saw that price action continued the bearish momentum, and as soon as price action tested the $2,010 area, we saw some bullish traction resume. And during the Asian session of yesterday, we saw buy pressure around the $2,020 area, and in fact we saw a little bit of a breakout of this descending trend line to give us an insight into a potential uptrend situation. So as a result of this observation, we did agree during our live session yesterday that we will be using these temporary ascending trend lines to guide our trading decision. And as a result of this, we said we will be buying at the breakout of the 2025 level, which was marked around this area. And interesting enough, price did break out of that structure. And in fact, if you missed out on that opportunity, we can see how the market came back to retest that area multiple times throughout the New York session yesterday, giving us the privilege to be part of that bullish move. And remember, we also said that we will be adding more positions if price action ever breaks out of the 2030 level. As you will see, we have two buy positions running at this point in time. Now, remember what we said yesterday, that the only condition that will make us to sell is only if price action will ever break down the 2020. And as you will see, at no point in time did we see price break down the structure, hereby negating any idea of even considering selling that asset. So it has been a good 24 hours for us, as we have the first buy position currently running with about 80 pips in profit, while the second buy position is currently running with about 30 pips. So we have roughly of about 110 pips in profit at this point in time. So with the way things are going right now, it is very, very appropriate of us to move all stop losses and secure this current buy position. So I will suggest that this position, all stop losses should be moved below the 2030. And while you move your stop losses, remember to give enough breathing space for price action to move around as we anticipate the labor data coming up today, and of course tomorrow from the from the US economic docket. Now, with a well-secured position at this juncture, what is going to be our next line of action for today? How are we going to continue buying? Well, personally, I will continue to maintain a bullish bias, especially after considering all the factors I mentioned earlier. And from a technical standpoint, as long as price action remains above this trend line and the 2025 level, we shall feel comfortable in a buy, in a bullish outlook in this particular market. Now, we might see a little bit of panic happen today. Maybe sellers come in and push price back. One thing for sure is that since price still remains above that descending trend line and the 2025 level, we still remain bullish. So we shouldn't get too excited or panic at the sight of any bearish momentum, as it could come back into the structure to now incite an uptrend move. So we remain very, very bullish on this particular asset. However, in as much as we're looking out for buying opportunities, what are the conditions that will make us negate the idea of buying and quickly adopt the idea of selling? Well, first of all, I would like to see price action break back down and come below that descending trend line to give me a level of comfort that price action is back into the seller's territory. And if price goes on to take out all the buy positions around the $2020 level, then at this point I want to start considering selling. So a breakdown of either of the structures, retest of structure, will be a beautiful confirmation that we do want to be going bearish on this particular asset. So these are my views on the XAUUSD for today. So I just encourage us all to mark out this level. We maintain a bullish bias here, and we already have structures which we will be using to guide that idea. So the trend line, mark it out, the 2025 level. As long as price remains above the structure, we feel comfortable in our buy position. But if price at any point in time breaks down the 2020 and that descending trend line, then we can now start considering selling this particular asset. So these are my views on the XAUUSD for today. Simple setup we have here. Mark out these levels on your chart and let's wait patiently for our structures to mature before we jump into any positions. So if you have any questions whatsoever, feel free to let me know in the comment section. As usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, after which I will be coming back to round off for today's live session.